Welcome to Trading Market Technicals. My name is Mark, and I'll be producing a series of educational videos. And today's video is going to be on gap trading and how to trade the gaps, right? There's definitely a mystery, so to speak. I get a lot of students and a lot of traders say, I thought this gap was moving higher, and all of a sudden it rolled over, and I got stopped out, and vice versa. Well, there's a little bit of little knack on how to trade gaps, and you really need to practice how to trade gaps. And I mean by practicing, 50 shares or 100 shares until you really get the knack of it. And I'm going to show you a quick synopsis on gap trading and what we did today in Celgene. Now, as you know, the market was weak, relatively weak this morning. However, the biotech sector had some good news on several different catalysts and some reports, and Celgene was one of them, and they gapped Celgene up higher, and this is what I wanted to show you. This is a daily chart of Celgene. So this is a pretty decent sized gap, especially when the market was weak, and as you know, Thursday and Friday's big sell-off, and then Friday really we had that little bit of reversal. So how do I play this to the upside or to the downside? Well, first I look at my daily chart and I say, okay, well, the market is really weak first thing in the morning. Okay, that's the first thing. Does Celgene have relative strength to the market, or is it following the market? Is it going to take this Celgene down with it? Well, the first thing I look at is the daily chart of Celgene, and I put two horizontal lines here. This is a pretty decent area of resistance, as you can see. For the last several months, it really hasn't gone anywhere up until this top, and it's kind of faded. Now it's back into this area of resistance, and you can see this by our volume profiles. So first of all, I'll say, okay, this is a pretty decent sized gap. The news is okay, nothing really spectacular. So I'm going to be looking for a spot to fade this the best of my ability. The second thing I want to do is, I'll get that daily chart out of the way, is I want to say, does Celgene follow the S&P? Basically, is it correlated to the S&P? And what I do is, on my Sterling Trader, I put a symbol overlay. I put the spiders, which is the benchmark for the S&P 500, and I lay my CLG, my CELG down. And if you look, and it just kind of go right here, the 30-minute chart, and then if you even go to an hourly chart, you can see how it really is correlated. And this is the big gap up today. So you can bring it down here to a 3-minute chart. You can see that it really is correlated to it. Okay, so now we answered our question that the S&P does follow it. So if the market continues to move lower, will Celgene move lower with it? And gapping into decent sized resistance with a big gap, I'm going to label this as a retail gap, meaning that it's a novice gap, right? Not institutions buying it and going to take it higher. Had a big move already, so I'm looking to fade this. So how would I look to fade this stock? Well, the first thing I would do is I would look to say, okay, where is my entry point? Well, my entry point would be 77.60. And why did I get that? Well, I got that because that was the low of the day here, 77.60. Okay, that's going to be my entry point right in here. Right? And this is where I entered at 9:35. So that candle, I entered. Where's my stop going to be, right? So we want to make sure that we always manage our risk properly, right? Well, if I'm going to enter this trade, I really need to give it room. So I need to give it to 78.50. So that's a 90-cent stock, $77 stock. Not far-fetched. So I mean, it's really not a big stop for a $77 stock. However, you need to trade it to your risk tolerance and your account size. So for instance, you need to position size your account. So if your account is very small, you need to be trading 100, 200 shares. If your account is relatively large and you can manage your risk properly and you can handle that risk, then you trade it accordingly to your size, whether it be 2,000 shares, if you're willing to lose $2,000 on a trade, if that's the type of trader you are. Okay, to make that perfectly clear. So I'm willing to risk 90 cents in order for me to try to make $1, maybe $1.50. I personally wouldn't be looking to sell it at $1. I probably, if I'm looking to take 1,000 shares, 2,000 shares, I'd probably sell half on the way back up if it's starting to go against me. But more than likely, you want to really let your stops work. So we entered at 77.60, and let me just show you what was going on here. And as you can see, the market started to sell off. And we are now down to 76.60, so there's basically $1. 76.18 is $1.50, and then we came all the way back down, believe it or not, to $75. That's a really nice ratio of trading. Now, we obviously didn't keep it right at the lows. You can. You keep a little runner, and then you would literally just get out in that area here. But I like to protect my stops, bring my stop down and break even, then bring it down again, and then the first sign of a decent tick, I would just literally start taking them off on the way back up again, but protecting my profits. So as you can see, real nice trade. If you can identify these gaps, it's very, very profitable. Very profitable. But again, you need to understand the risk, and you need to understand where and identify your stops. And another thing, one more point is that I like to look at a 1 and 2 minute chart when the market first opens up, because that gives me a good sign of where my quick read of support and resistance is going to be in that stock. Well, guys, I hope you enjoyed the brief video and educational videos, and if you'd like to learn more about it, please visit our website at www.tradingmarkettechnicals.com or email us at info@tradingmarkettechnicals.com. Thank you very much, and we'll talk to you soon.